heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde in San Francisco. Ed Ludlow, he's off. This is Bloomberg Technology. Coming up, the US set to unveil sweeping tariffs on China, targeting EVs, batteries, and more. Details ahead. Plus, we'll sit down with the CEOs of Grindr, of Akamai, to break down their latest earnings results. And Apple apologizing for its latest ad after online backlash. We'll discuss that and so much more throughout this hour. First, let's get a quick check on these markets. And look, it is 3 straight weeks of gains, folks. That is the best winning streak we've seen since back in February. But on the day, we're actually just pulling back a little. Look, only 0.2% on the NASDAQ. Some mixed economic data coming through. In particular, some of the confidence, consumer confidence, actually falling quite significantly in the previous month. That because of lingering inflationary issues, labour side concerns. But nevertheless, we're down some 0.2%. But the STOXX 600 over in Europe on a tear are up 0.8%. And in fact, we have just a real run of good gains in Europe as we see earnings beat time after time. Every single industry group up to finish the day over in Europe. Bitcoin echoing some of that slight risk aversion. But notably, we're also seeing, well, the first time you're seeing crypto exchange volume actually falling in about 7 months. So post-Bitcoin ETF, slight pullback. Slight reality bump. We're off by 2.6%. Move on, have a look at some of the individual movers that we're looking on the micro perspective. And Warner Brothers Discovery, actually your best performer when you're looking at the NASDAQ 100. Up more than 3% yesterday. Lucas Shaw breaking the news that David Zaslav is looking to control costs here once again. Maybe even more job cuts to come. Remember, they've already fired some 2,000 people. We could see a real focus on, ultimately, profitability at the moment for Warner Brothers Discovery. We're seeing actually Apple off by more than a percentage point. Look, we'll get into the woes that is the pulling of the ad when it comes to the iPad, that seemingly crushing of ingenuity and human expression. Certainly not being liked. Apple apologizes, but we're down a percentage point. Tesla also down 2.3%. Earlier it had been trading higher. Now, is this something to do with the fact that now we've got a flip reverse on what Elon Musk is currently doing with superchargers? Yes, he is going to be focusing on some $500 million of investment in that area. Swift reversal from what we'd heard the previous week, the fact that he was, of course, firing the entire team of the superchargers. But also, is this more to do with geopolitics? Is this more to do with the fact that the Biden administration is potentially set to unveil a sweeping decision on China tariffs next week, targeting key industries, including, well, from Tesla's perspective, electric vehicles and batteries and solar cells? Would that mean we get Chinese backlash on U.S. producers such as Tesla? Joining us for more, Bloomberg's Mike Shepard, who's in Washington. And Mike, incredible reporting coming from the team at Bloomberg. And it does seem that what this is finally, after years of decision, more focus on China in a targeted manner.
Well, it certainly is, and I'm glad you brought it up in that context. The team did such a terrific job really going after this for weeks and weeks to try to figure out when and in what manner this decision would take place and how it would hit. And it is really shaping up in those 3 areas that you outlined. This is going to be one of the most significant moves that Biden has made since taking office with respect to China. It is one of the most consequential because it affects that big round of tariffs that Donald Trump announced back in 2018, and that has been the subject of a lot of back and forth with the world's second largest economy since then.
Therefore, are we expecting more back and forth? Are we bracing ourselves for the fact that if this does indeed target more of the EVs, the solar, and indeed we've already seen some focus on metals, even though that didn't have a broad implication, are we going to have more tit for tat here? Is China going to respond?
Well, China responded this morning, at least with a verbal volley, objecting to this. You'll recall that, with the emergence of news about the export controls aimed against Huawei, that they saw that as economic coercion. They're complaining about this as well. The response to the news last night was swift from the Chinese government. they're concerned. However, the retaliation from China may not come in the areas that directly align with the policy that we're seeing and will expect next week. Senator Chuck Grassley, according to our reporting, is indicating that we may see a retaliation in agricultural products, trying to hit America where it hurts, but in a different place. And it's something that in the past has been targeted by Beijing.
Just stay with us, Mike. We've got some breaking news. This being reported by the Wall Street Journal, so building on the Bloomberg reporting that apparently the Biden administration is actually going to quadruple tariffs on Chinese EVs. Now, how broad an implication is that, considering not many electric vehicles are actually shipped from China to the United States?
Well, you're right. And the whole idea of this, at least with EVs, is it's symbolic in a way. It's low cost for the Biden administration to quadruple EVs because there is no consumer impact at home. Remember, when you raise tariffs, it is not the country that is targeted with the tariffs that pays the cost. It is actually the consumers in the purchasing country that actually pay the price. And in this case, you know, China does not have much of an EV market presence here in the U.S. with its makers. So the administration is trying to do two things. It's trying to show that it's tough without imposing too much cost, but it is also trying to create a bulwark so that it is harder for Chinese makers to break into the U.S. market, which is becoming increasingly amenable to the idea of EVs.
We'll see also what Europe does. We know that Europe has been focusing a lot on EVs when it comes to China as well. Mike Shepard, brilliant to have you. Thank you so much on the latest when it comes to tariffs. Now, all of this, well, is the context with which you're trying to invest more broadly across assets at the moment. The geopolitics is a key headwind. Let's dive into that and the impact on equities and tech in particular with Mona Mahajan. She's senior investment strategist at Edward Jones. And once again, we're just, Mona, seeing more and more navigation necessary by big tech companies of geopolitics. Is that an overhang for you?
Yeah, thanks, Caroline. It's a great question. Look, I think as we get closer and closer to election time period, we will be hearing more and more about the policies that both sides of the aisle will be proposing. And a lot of times what we see is the impact is felt in an outside way in certain sectors. And technology is certainly one of them. I'd point to healthcare as another, depending on regulation and policy that's administered. Higher taxes, as was noted earlier, higher tariffs, taxes in general, does tend to be inflationary. So we have to think about that. Will the administration want to take that step? Or is this more symbolic in nature in that we don't want to, one, enter a more meaningful trade war with China, but two, we want to signal to them that they cannot be flooding the market, whether it's EVs or any other end market or good that they may be trying to get into the U.S. So keep in mind, some of it is signaling, some of it has real meaningful implications for areas like technology, but we will get more and more insight into how these policies may unfold, I think, as we get closer to the November time period. I'd say more broadly, we are looking at a market that has been driven still by the momentum behind AI and technology and mega cap technology in particular, but we do expect that to broaden over time.
And can that broadening withstand still issues? You mentioned inflationary pressure coming from tariffs. Inflationary pressure is still something that the Fed is still very focused on. We're hearing from many a Fed member at the moment saying we're going to be higher for longer. We see stocks just take a little bit of a dip on the back of that context, Mona. Are you expecting inflationary headwinds to limit some of the increase in the stock markets from here?
You know, actually, we are in the Jerome Powell camp, who he did outline, you know, he had the famous line, he doesn't see the stag and he doesn't see the inflation. We are also of the mindset that we do think inflation can gradually, perhaps not in a straight line, but gradually move more meaningfully towards that 2% target for a couple of reasons. One, we do see that shelter and rent component playing some catch up. We are seeing the data in real time. If you look at a Zillow rent index, move meaningfully lower. That has not yet showed up in any of the CPI baskets. And even the PCE basket, which is a lower part, has a lower exposure to shelter and rent, still hasn't moved meaningfully lower. So we think that's coming. Number two, we are starting to see more meaningful potential slowdown in the wage gains component of the labor market. So labor market, a couple of early signals of softening. Not only the non-farm jobs report on Friday, but also the jobless claims figure this week was elevated. We think over time there'll be better balance in the labor force, more supply coming in, less demand for jobs, which will lead to softer wage gains, which has a direct implication on services inflation. So the combination of shelter and rent and a softening labor market, we think, will lead to better inflationary trends going forward. That combined with this earnings growth picture that we are seeing continuing to outperform and improve meaningfully, we think is a good tailwind for equities broadly.
Interestingly, here in San Francisco, the one key thing that comes up time and time again is how expensive engineers are, whether it's particularly in the field of AI. Software developers a little bit less, but still they're arguably about $1 million in terms of their overall pay at the moment, Mona. I'm interested in what you make, therefore, of AI, the tailwinds of AI more broadly. Are we going to see, when you mentioned the broadening out, which industry groups in particular, is it the healthcare industry groups that we start to pile into?
Yeah, it's a great point, because thus far what we've seen is most of the gains from the AI trade have been felt by the enablers of AI, the infrastructure players, semiconductors, for example. We do think over time you will see the sectors that will benefit from the productivity gains of AI start to place a meaningful catch-up as well. Now, you mentioned healthcare. That's certainly one of the sectors. But if you look at financial services, if you look at manufacturing and industrials, all of those sectors we think will be beneficiaries. And this is over, not a 12-month period, but probably more like a 3 to 5 year period. We will start to see those productivity gains come through. And keep in mind, those sectors are not only prevalent here in the U.S., but globally. When you think about where manufacturing, financials, industrials tend to lie, it does tend to be in non-U.S. markets as well. So we think there is a case to be made to have exposure to the U.S. We like having exposure to that mega cap technology, but also the sectors that may benefit from AI. But also international, we think, still plays a meaningful part of your portfolio.
Thanks for going global with us. We love it. Mona Mahajan, great to have you on. Senior investment strategist at Edward Jones. Stay well. Happy weekend. Meanwhile, look, maybe not a happy weekend for some if you're looking at the infrastructure here in the U.S. A severe solar storm is expected this weekend, and it threatens to trigger blackouts, disrupt navigation systems, knock out high-frequency radios around the world. Now, this is the first time since January 2005 that the U.S. Space Weather Prediction Center has actually issued a G4 geomagnetic storm watch. It's the second highest on a 5-step scale. And it says multiple waves of solar energy are going to be bearing down on the planet. Now, 5 eruptions of material from the sun's atmosphere are forecast to arrive starting late on Friday and persist through Sunday. Coming up, we'll hear from Snapchat CEO Evan Spiegel, talking all things social media as TikTok ban looms here in the United States. What did he have to say at yesterday's San Francisco tech event? Meanwhile, TSMC on an absolute tear. Let's focus in on the fact that its April sales jumped 60%. You guessed it, sustained demand for AI chips. But maybe there's a broadening out here as well, as we see perhaps a bit of a bottoming out in the global smartphone industry as well. Returning to growth for them. We're seeing it really paying out for the world's largest contract chip maker. This is Bloomberg Technology. Time now for Talking Tech. First up, Elon Musk's U-turn on superchargers. Now, the Tesla founder says that the company will still spend well over $500 million to grow its charging network this year. Now, the news comes just over a week when Tesla actually fired nearly roughly 500 people who were running the charging business. Plus, for years now, SoftBank has quietly sold off billions of dollars of assets from its flagship Vision Fund. Now, a sign that basically founder Masayoshi Son is shifting away from broader venture capital deals towards investments in just semiconductors and AI. Now, since the end of 2021, SoftBank's Vision Fund saw its US portfolio shrink by almost $29 billion. And Microsoft enters the mobile gaming arena, announcing it will launch its own version of a mobile game store by July, taking on the likes of Apple and Google. Now, the browser-based store will debut Microsoft's own games and offer discounts on in-game items. Microsoft says that eventually it will open the store to other publishers at a later date. Let's turn from gaming to social. And Snap CEO Evan Spiegel is urging the government to develop a more comprehensive framework for dealing with national security issues. So after social media rival TikTok faces a divestment or ban ultimatum. Now, here's part of what he had to say at Bloomberg's technology event in San Francisco.
Always focused on communication between family and friends and making that really fast and fun and visual. And I think that's why we've been able to continue to grow through all the changes that you mentioned to now reach more than 800 million people. So, I think just sticking, really staying focused on those close relationships. They're the relationships that mean the most to us. They're the people we talk to most frequently. And enriching that, through Snapchat with visual communication, with stories, with the map that allows people to see what their friends are up to, where they are, what they're doing. All these sorts of products, I think, help bring people closer together with the people that mean the most to them. And I think that's really what's led to our just enduring growth.
We actually have a poll, a TikTok-specific poll. What is your opinion on the TikTok ban? I'll be bummed when TikTok is banned. TikTok should be totally banned. I don't care either way. So please vote. Are you a TikTok should be totally banned kind of guy? Like, that seems like it would be an opportunity for you.
It's probably a no-brainer.
But really?
What I think is really important is that we come up with a durable framework to deal with these sorts of national security issues. I think the United States has recognized that there are these issues, but has sort of been dealing with them in sort of an ad hoc, one-off kind of way. And I think that has real implications for the economy looking forward. If you think about how many businesses in the United States, have a relationship with China, whether or not they manufacture there or they sell their products there, I think it's going to be really important for those businesses here in the United States to get a lot of clarity around what the government thinks is totally okay. Maybe that's like kids' toys and diapers and those sorts of things, no problem. But sensitive technology, chips, things that could be used in weapons, probably not okay. And I think the sooner that the United States government can be clear about the areas where they think business cooperation makes a lot of sense, and also clear about the areas where it's, maybe not okay, the more stability we can have in our economy, and I think we can, maybe better strengthen that relationship. I think it's the uncertainty that's tricky. So, I think the more the government can share about how they're thinking about those risks and, really create some clarity for business, that'll be helpful.
Now, TikTok's not banned yet. There is uncertainty for some of their really important stakeholders like creators or advertisers. What are you guys doing to take advantage of that uncertainty right now?
The most important thing we can do is just focus on our own business. Folks have lots of alternatives when it comes to short video. They can use Spotlight, which is on our platform, or YouTube Shorts, or Instagram Reels. So I think there are a lot of different opportunities in the short video space. So what we've continued to do is just focus on what creators love about our platform, which is the relationship they can form with their audience. And that's primarily through our Stories product. So creators love using Stories to just show what they're doing throughout their day. And because we revenue share, creators don't feel pressure to do all these brand deals. So Snapchat content just feels very authentic, which is why their viewers and their audience, really love it, and why that resonates with them. And then they use tools like Spotlight to get more distribution, to help people discover them, so that they'll, add them and watch their story on an ongoing basis. So I think that's a pretty unique value proposition we have for creators, and we're just going to, really stay focused on that.
Snap CEO Evan Spiegel yesterday. Coming up, well, we're going to be deep diving into Grindr. George Arrison's joining us, the CEO of that business, hot on the heels of its own earnings report, so more on social in the LGBTQ context. Meanwhile, watching shares of SoundHound AI. Shares actually trading higher, more than 13%. That's as we see the voice AI software company reporting first quarter revenue that really smashed expectations. They gave a revenue outlook range for the full year that met the average estimates as well. But Cantor Fitzgerald saying they're announcing several new partnerships across automotive and restaurant end markets. This is Bloomberg Technology. Let's talk earnings now, with Grindr posting its first quarter results showing revenue growth 35% year over year. Let's discuss all of it, the margin as well, and the expansion of products. Grindr CEO George Arison is here with me. And George, you're saying in your statement this was a really strong set of numbers. Still loss-making, but much smaller loss.
It's not a real loss from like financial perspective, because it's all warrant related. So we have warrants because we did a SPAC, and warrants are held as a liability, right? And so when you account, we have an operating profit and then a loss because of the warrants. So from the business perspective, we didn't lose any money.
And an adjusted EBITDA that's showing margin, that's improving.
I mean, we did very well on EBITDA, 42%, which I think is really healthy, and we're investing in the business at the same time. So,
and where are you investing? Because you do talk about your product roadmap, the fact that you're bringing two key products to bear, a lot of technical innovation when it comes to the chat part as well.
Yeah, so that was a really big launch for us. We launched a new chat architecture. People would lose chats every time they switched phones before, and there was a huge complaint. So it's not going to happen anymore because chats were hosted locally on your device, so we moved away from that.
Yeah.
We are, when I joined, we didn't really have a long-term product roadmap. We spent a lot of time last year working on that. We believe there's huge extension opportunities for the product, extending it more into dating, building feature set to support dating, and do that not in terms of what other people do today, but what dating world will look like in 2 years when AI.
And what does that look like?
Well, AI is going to be first, right? Like, I think people will expect that social networks will actually drive connections through AI rather than through filtering. Because today, the dating platforms haven't really fundamentally changed. It's you come to a page and then you filter what you're interested in. I think that's going to really change.
So you're going to be pushed people because the AI can already understand you.
Exactly, either from activity that you do on the app or even activity from the outside the app, right? Like, there's so much information in your text messages about who you are, what you're into. What if there's a world where you uploaded a bunch of your text messages and we use that to understand who you are? I'm not necessarily saying we're going to do that, but those are the kinds of things I think that AI will allow companies like us to do. And so we don't have a broad dating-specific feature set today. We have a lot of dating that happens in the app through conversations and chat, but not in terms of like features for dating specifically. And so as we build that out, I think there's a huge opportunity to kind of skip over the world we're in today and go directly to the world that will be coming in a couple of years.
What's interesting is, of course, that means that you have to have a lot of your community buy-in to that. From a security perspective, I know that at the moment in the UK, for example, you have been sued because of what you claim is a mischaracterization of the way that you were running the businesses practiced 4 years ago. But when there is a concern about privacy, how do you push that forward?
So two things. One is, for us, privacy is paramount. In 60 countries around the world, being gay is illegal. And we have users in most of those countries. And so we need to really protect our user privacy because it's not just a matter of like good for business, it's a matter of their life and death in some respect. And so we take that really, really seriously, and we do a lot to protect user privacy. That's why you can get on Grindr without giving a photo, for example. You don't have the verification to support user privacy. Secondly, we've never shared any HIV or medical information with any advertiser ever, so it's a complete mischaracterization of what Grindr doesn't do. We've never done that, and we never will. So we're going to fight that lawsuit, obviously, very vigorously, because we don't think it has merit. But it's also important to remember that whatever they're saying might have happened, which is not true, they are claiming happened a long time ago, 2 managements ago. So this is a very different regime at Grindr today than was under Chinese ownership in 2018. So, I think that's an important thing as well. I think users have to trust us. That's really important for us, and that's why we make privacy such a big deal at the company.
I wish we had longer, but we've got about 30 seconds. One thing, you are hiring again?
We are. We've grown our Inch team about 50% in the last quarter, and we have a lot of roles open across the company.
George, come back. Thank you for talking us through it all. Grindr CEO George Arison on that 35% year-on-year growth in revenue. Coming up, we're watching shares of Bumble. Well, kind of linked in the dating space. Bank of America actually upgrading the online dating company to buy from neutral on both valuation and upside to growth. But we're under pressure by some 1.2% on the day. So I'm afraid that Bank of America not enough to galvanize any risk on attitude there. This is Bloomberg Technology. Welcome back to Bloomberg Technology. I'm Caroline Hyde in San Francisco. And let's just get you a quick check on these markets, because today we're currently seeing, the market just a little bit sanguine on the broader benchmark, but the Nasdaq 100 actually turning into the green now. Look, we've had a relative wealth of overall context coming from the Federal Reserve. We've had Fed speak, still saying, look, we're going to be keeping these rates higher for longer. You've also had, on the flip side, some slightly weaker economic data when you're looking at consumer sentiment. Add that together, and look, we're just still up about 0.2%. And in fact, we're on course for the best, a 3 straight week winning streak when it comes to benchmarks. That's actually the longest winning streak that we've seen since back to February. So we're currently higher. We're seeing the Stock 600 on a tear as well. Europe, once again, seeing another day of gains, and that's been ramping up higher as we see earnings doing well. We're seeing 10-year yield just up 4 basis points, though, so still factoring in perhaps some of the supply supply that we've seen this week from the bond auctions, but also perhaps still some sensitivity to Fed speak saying we're higher for longer. Move on and have a look at some of the individual movers that we're having a look at. Because ultimately, we've got key TSMC moves that we were just shining a light on at the previous part of the show, that TSMC up more than, call it 5%. Another great month. April just showing that revenue is higher and growing at a faster pace than the market had anticipated. Of course, ongoing AI demand, but also factor in a global scene for smartphones that seems to be bottoming out and seeing some recovery in revenue growth. So key for that chip maker. We're looking at Tesla off by 1.5%, whether that's the reversal that we've seen on its superchargers, whether or not it's also the fact that we're getting more tough talk coming from the US. Bloomberg reporting that maybe we'll see increased tariffs coming on Chinese EVs in particular. And what would that mean for the tit for tat? Could that hurt Tesla a little bit? So we're seeing it just down. Nvidia up 1.4%. Doesn't look like some of the chip makers are going to potentially be hit anymore when it comes to the tit for tat with the US and China. Remember, we've got Nvidia earnings still to come. But meanwhile, I want to take a quick look at another key stock, Akamai, currently falling. Now, this is after forecast for revenue and adjusted earnings per share came in, less than where the market had wanted to see it. Here to walk us through some of the numbers and the content distribution part in particular that seems to be the weakness is the CEO, Tom Leighton. And security revenue was good, up 21%. Compute revenue good, up 25%. But it's the delivery revenue that is under pressure. Is that what's really hitting the revenue forecasts?
Yes, exactly right. Internet traffic always increases, but it's not in a straight line. And we have the world's largest content delivery network. And so when there are dips, we feel it. The good news is that we really diversified our business beyond delivery to the point where now 2/3 of our revenue is security and compute. And as you noted, both of those businesses are very strong, great growth and great potential. And I think over time, as we have more and more of our revenue from security and compute, the dips you get from time to time in internet traffic, we won't see as noticeably on our overall performance.
Interesting. Diversification key. What took my interest was a large social media customer optimizing its costs is what was put forward as to why you've downgraded some of the outlooks. Who is the social media player? Are we seeing that more broadly, or is it just one?
Well, we do have a very large social media company, and they are cutting back as best they can on costs, facing some geopolitical pressures. I would say more broadly, we've seen sort of a weak past couple of months in the gaming vertical and in video. And there's been a lot of reports out there talking about, subscriber numbers, and traffic as a whole. And so we feel that because, we carry all the video out there and a very big supplier for the gaming companies. And so that creates a little bit of a dip in our outlook for the year. That said, we raised our outlook on security and compute. Both of those businesses very strong.
Tom, you're the perfect person to therefore ask, because I'm reading between the lines here. A geopolitically affected social media company has got to be TikTok. And I know that you have expertise when it comes to security and more broadly an exposure at the moment that we're seeing of US companies to China. How much are you seeing geopolitics weighing on your business and the business of your clients?
Well, there is some concern there. We made a disclosure that in particular, if the law does take effect, banning TikTok, that could impact about 1.5% of our revenue next year. It shouldn't have a direct impact this year. And it remains to be seen if the law will go into effect.
Are you trying to diversify out of exposure to China more and more, Tom?
Well, we want to diversify our company as a whole. Today, we have 7 customers at 1% of revenue. The goal is to have a broader and broader base. And I think we've done a really good job of that, both within the customer base and also across product lines and geographies. So that, you won't see much of an impact, as we go forward when, particular things happen on the political stage or you get a dip in traffic.
And with the wealth of patents that you have and the focus on security, where are we in the cybersecurity landscape? How much are you seeing, in particularly in the age of artificial intelligence, it becoming harder and harder to ensure that we are protected in some way from our data?
Yeah, things are in a very challenged state with cybersecurity, particularly with the advances in Gen AI, which as of now, are very helpful to the attacker. It's much easier for them to generate very malicious malware. We're seeing a lot more breaches, and I think the key now really is to develop the internal layer of defense for an enterprise. Because probably you're going to get breached, and the key is to identify it quickly and to proactively block its spread. And there we have the market-leading solution with Guardicore to stop the spread of ransomware and data exfiltration malware, and that's a very rapidly growing segment for us.
And a key acquisition made. Tom Layton, thank you so much for spending time with us, the Akamai CEO, on all of geopolitics and indeed the revenue from the business. Meanwhile, at our Bloomberg Technology event, I actually talked a little bit more around AI, but the infrastructure within, coming from chip makers, Ampere Computing. The CEO, Renee James, was on stage with me to discuss the state of, well, the semiconductor industry, some of the competition there. Take a listen.
I had worked in semiconductors, obviously, a long time, and one of the unexplored areas was continuing to deliver performance, but a lower and lower and lower power. Because one of the things that we had the luxury of doing in the early days of high-performance semiconductors was just to use more power, like make them more powerful. They got faster, but we threw more power at it. So when we started the company, we said, you know, we don't need to start a company to prove that we know how to make semiconductors or that to do what we'd already done. So really what we wanted to pioneer is what we call, technical term, efficiency frontier, which is that knife's edge between super high performance but at lower power. And up until the time that we started Ampere, low power meant low performance. Okay. And so people would think about it and they'd be like, oh yeah, we have a super low power device. Like, is it for a cell phone or is it, you know, whatever? Even though nowadays phones are super powerful. Yeah. So we endeavored to build products that could be air cooled. And we, of course, had been building microprocessors, my core team and I that started the company. We'd been building microprocessors for a long time, as you pointed out. And we, of course, knew that, you know, that ML, AI was a major workload. So we were thinking a lot about how much power it takes and how are we going to even be able to build all these data centers? Because we had been a team that had worked together on the first phase of build out of what you now call hyperscalers. And we knew how big these data centers were getting and how much power these chips, the combination, right? So that was our thesis. You can do this at lower power. You can do this in a way that enables all these workloads and stay air cooled, which means you don't have to build a brand new data center with liquid cooling and that you can stay within the envelope of kind of, you know, think about being landlocked. When you build a data center, you have a certain amount of power in that footprint. How are you going to ever upgrade to better compute?
It's a relatively new chip company, and it's making inroads into market share. Ampere Computing CEO Renee James there. Of course, 28 years she'd had at Intel before founding her own company. Coming up, we're going to be joined by Index Ventures partner Nina Achadian. She's going to get her take on AI investing trends, of course, where she's seeing the hype and the reality. That's next. This is Bloomberg Technology.
I think 2024 is going to be a monumental year for AI.
The current generation of models that we're seeing out there is still in the $100 million range. You know, I think all of this can scale to the $100 billion range.
Llama 3 should not be open source. It's a national security hazard to open source.
We are trying to be the most responsible actors that we can be and think about what are the potential externalities that could be caused kind of accidentally by this tech.
I also worry about the overhyping of human extinction risk. I think that is blown out of control.
I feel like today, every single company has to build their own AI. Otherwise, they run the risk of being left behind.
Get the theme there? It was AI. Across every single conversation yesterday when we were at the Bloomberg Technology event, and let's keep that conversation going. Nina Achadian is with us, Index Ventures partner, who joins us for today's VC Spotlight. And boy, you've been busy writing some checks, backing some AI companies, and are the valuations out of whack?
Well, thank you for having me, Caroline. It's great to see you. Yes, there is definitely a tale of two cities. If you are an AI company right now, you can raise in the 100x ARR multiple, but if you're not an AI company, it's still trending around 10x. So there is a huge discrepancy between the valuations for AI and everybody else.
Where are you seeing the value, therefore, in AI investments? Where would you want to be allocating checks when they are at a heady price point?
Yeah, so for us, it really comes back down to the basics. Is this company building something that has true ROI for their customers? And we're really seeing that a lot in the application layer, sometimes focused on very specific verticals. For example, we invested in this company called Viscom. They build software for industrial designers. So think anybody that has to design a shoe, a car, a piece of furniture. They use AI to help these industrial designers accelerate their process. And they had some inbound interest very early on from huge companies like Ford and New Balance. And so those are really the areas that we find attractive to invest. Clear customer, clear ROI, and of course, over time, we'll see more and more of these, hopefully.
You're leading the team here in San Francisco, and I'm sure there's many an entrepreneur who views us who's interested in how, therefore, Viscom gets your interest. How did they get your inbound? Do they come to you? Do you come to them? How are you finding out these jewels in the rough?
Yeah, well, for us, it's all about investing in people. And so we try to build relationships with folks very early. Sometimes this is while they're still at their current job, or it could be, through a network that we have of our own entrepreneurs. And so we really meet people in all different avenues, whether it's events, referrals from our own entrepreneurs, or even just outbound. And so we're always open to meet great entrepreneurs.
Where are some of the other use cases of AI really piquing your appetite? There, it would seem to be more the visual perspective in the way in which ultimately we can spark creativity. Look at the backlash to Apple's ad. Like, there's a worry about creativity being stifled rather than augmented. But where else is artificial intelligence and generative AI reaping rewards for some of the companies that you look at?
Yeah, so I think the code generation space has been an area that a lot of people have talked about, and there's many companies that have popped up in the space, but that seems one that's an obvious use case, and we've already seen a lot of customers, even Fortune 500s, really putting down, commitment to try out these new code gen softwares, companies like Augment, for example, and others, and so we're really excited about that use case. And then if you think about anybody that's using pen and paper and has a lot of unstructured data, that really is ripe for the use of AI, because now suddenly you can make sense of all of that data and really integrate into your workflow something that will accelerate what you're trying to do.
That sparks my imagination back to our conversation with May Habib yesterday of Writer AI. And she was saying, ultimately, she's getting a lot of calls from other companies right now who are running out of money and they would need to be bought. Is this something you're seeing of a generation of AI entrepreneurs that are got their companies off the ground, but they can't sustain it from a cost perspective?
Absolutely. I think we're going to see a lot of consolidation in the space, because everybody talks about how it's a war for talent, specifically within AI. And it's just not sustainable that all of these companies can exist at very high valuations when they're still very early in revenue. And so, we saw that very early on with Mosaic and Databricks, of course, the Inflection and Microsoft partnership. And so I think we'll start to see more and more of that over time. And hopefully, 1 plus 1 will equal greater than 2.
Are we going to get more of these weird kind of acqui-hires, though? Because the Inflection Microsoft deal was a relatively extraordinary one.
I wish I could tell you. It was extraordinary. We were also scratching our heads a little bit on it. But look, I think it all comes down to acquisition of talent. And I think for a lot of companies that have raised money and they're struggling to find that product market fit, I think it could be an attractive path for them moving forward.
We've only got 40 seconds left, but where else if not AI? Where can still be a good investment?
Look, I still think this transition from doing things manually to digitizing them is really important for some of these massive industries. For example, there's a company that I invested in called CISO. They're trying to be the Workday for the agriculture industry. So right now, in the agriculture industry, you have to do a lot of paperwork on digital onboarding completely manually. So doing things like that and helping those huge industries really transform to tech first, I think is a huge opportunity.
Wish we could talk more. Nina, thanks for coming in.
Thank you
so much. Great to have you here. Nina Shadian, she's an Index Ventures partner, based here in San Francisco. Now, let's go back to the Bloomberg Tech event that was held right in this city yesterday. Flow co-founder, and of course, well known for being the WeWork CEO, Adam Neumann, sat with our own Brad Stone yesterday to discuss his attempts to win back WeWork. Take a listen.
And we're just at the middle of all of it right now, but just to explain a little bit more about it. Our bid was $650 million. The bid that seems to be the one that they're considering to confirm at the end of the month is $400 million. It's a difference of 250 million. The number is very important. I'll explain in a second why. When in bankruptcy, and I'm learning a lot about, I've never heard anything about it before, so it's all new. I didn't think bankruptcy was a beauty competition. I thought bankruptcy was.
That is a line in your brief.
Yeah, it is a line in the brief. I thought it was whoever is going to give the best offer. And when you base it, well, what is the other offer? What's the plan that they're showing? So they show a plan and they give numbers. And just to share a few numbers in the plan that's going to be presented to the judge at the end of the month, the plan says that the average, two numbers that are very easy to track: average revenue per member and occupancy. The two numbers that the current plan is forecasting would be the highest numbers we have seen since 2019, which is as far as we can go, which I would call peak office, and would hockey stick, and they would have to achieve those numbers by the end of this year. I'll say a little more. The profit margin of the buildings would have to go from 16% margin, which is the last number that we saw right before it declared bankruptcy, to 24%. That is 50% growth in margin by the end of this year.
And this is under your plan or
their plan?
Their plan.
No, their plan.
So you're saying it could be hyperbolic?
Oh, I'm saying it's definitely unfeasible.
But let me just ask you, I mean, don't the creditors have a legal requirement to take the best deal? So is there something, and you said it's not a popularity contest, so if it was, why, if they looked at your deal and perhaps had a legal requirement, and a very self-interested requirement to take the best deal, why do you think that they have bypassed?
So we're getting very technical, but let's say one.
I don't think it's a technical question.
Well, it is, because your real question you're asking is the judge obligated to take the best deal, or does the judge get to choose what deal he's going to take? And I think it gets quite technical. But let's say something else, just about back to what I said. From 16% to 24%, 50% growth in 1 year. Without spending any money on on a business that now has aging buildings, in what I think is one of the worst office markets, maybe in the history, but definitely of the past 40 years. Look around just here in San Francisco, but it's a global phenomenon. If they achieve these very rosy plans that I think are unfeasible, they would then need to, in 2025, grow from that to not go cash flow negative.
It's going viral. That was part of Apple's recently pulled advertisement. Of course, for the new iPad Air, the company facing backlash online after the ad depicted, well, as you can see, musical instruments, TVs, paint cans, other creative tools being crushed into an iPad. Apple issued a rare apology for the advert and said that it upset many creators and other customers. The company also said it will not air the ad on television as planned. Meanwhile, let's just talk about healthcare for a moment and a huge acquisition that Oracle did, a $28 billion one, 2 years ago, to acquire electronic records company Cerner, promising a revolution in healthcare technology. However, interviews with more than 30 current and former employees and customers show that the software maker has lost at least a dozen of Cerner's large clients. I'm pleased to say that Brody Ford is the guy behind the very well-read story. And so what? They're all in on healthcare, but the clients don't seem to like the tying together?
If you are anybody with a brain, it's hard not to look at the healthcare system in America and say, something's not right here. We could fix this. Apple's done it. Google's done it. Now Oracle's done it. Consistently, they found, hey, this is tough to disrupt, yes. Right? And so Oracle said that we can buy this company, which makes essentially, if you're at the doctor's office and they're taking notes, prescribing stuff, all the kind of software for medical facilities, they run that. They said, if we buy this, we can integrate these systems well, put it on the cloud, make it run easier. We're a tech company.
Generative AI,
Throw some generative AI. Turns out it's hard. And so it's been really tough. They haven't been able to make the progress they've wanted. The company they bought was kind of on a downward trajectory. So, I mean, this is not all Oracle's fault, but in the 2 years since they've purchased it, the outcome has been revenues down, customers have left, they've fired 3,000 plus people. Wow. It has been tough going. And when they bought it initially, the talking point was, this is going to boost our earnings, revenue growth engine. exclusive financials we reviewed show this has not been the case.
We've got 30 seconds, but the move to Nashville then, not going to happen?
Move to Nashville? Look, it's hard to say. I saw some other documents that when they moved to Texas, more people are still in California. So what does the headquarters mean? Is it a state of mind? Is it where all your employees are? We do not know.
It's a state of mind, Brody Ford. Nashville is a
Thank you.
state of mind. We thank you so much for being with us. He's going back to New York. I'm going back to New York. That's it for this edition of Bloomberg Technology. Do not forget to check out our podcast. You can relive so much of the great content that came out of the event yesterday at San Francisco. This is Bloomberg.